So I don't know if you saw like Charlie and the Chocolate Factory, that
Yeah.
movie, but like when he gets all the kids to sign it and it like goes on and on, starts in really big script. And then all of a sudden it's like keeps going and going and going to where it's like a little tiny magnifying glass. That's
Yeah.
how I feel like insurance policy contracts are.
Welcome back to Money Talks Life Lessons. My name is Melissa McGuire. I am a certified financial planner and co-founder of Isle Wealth with Raymond James. I'm here today with my fabulous co-founder and business partner, Joanne Caven.
Welcome back, and we're talking about insurance, everyone's favorite topic. I really sound like a radio announcer.
I think after the first episode that we did on this, it will now be their favorite.
Oh,
I think we're that good at it.
Oh my gosh. For those of you listening, I am totally tooting my fictitious car horn. Anyhow, so let's get back into the topic today is living benefits, right? So insurance that you would need if something to happen to you and you were still alive.
Yeah.
We talked a lot about how your income is your biggest asset in the last episode. Can you explain why that's such an important lens when it comes to disability coverage?
Yeah. So your income is your biggest asset. Your ability to earn that income is sort of a caveat to that, because as we talked about in our last episode, we might consider your income over the next 20, 30, 40, 50 years and what that will do for your planning, for your family, for everything.
Mm-hmm.
If you take away that ability to earn that income, then that changes everything for you.
Right.
So when we think about like disability coverage, it is covering for either that ability or that niche or that ability to work at all, coverage. And then the protection of your potential, as we sort of talked about in our last episode, for your potential, your family potential, and your dreams potential of moving forward. Let's talk about the different types of disability insurance. And you may not know that there's multiple types. There's the insurance that you get through work. Maybe there's insurance that you get through the private policies. Like, let's talk about the differences of those.
Yeah, I mean, I think a lot of us who are working for an employer, we kind of fill out what we're looking to do on these group benefit applications. And they'll say, okay, do you want short-term? Do you want long-term disability? What does that mean? Right. And so we have a few different options, right? So you'll talk a little bit about short-term disability, which could, suffice if you got a really bad illness. Like a lot of people were getting longer COVID, right? Or maybe you're getting a hip replacement. It's going to prevent you from being able to go into work for a few weeks, right? So it would cover your wages for that period of time. Now, there's also the longer term disability, whereas once you are on short term for too long to when it expires, it would then roll over to a longer term policy that you, as long as you're eligible, would be able to receive until you turn 65.
Right. And this is all under sort of the group benefit plan. So we're talking about it.
Exactly.
Okay.
And I would challenge, our listeners to really look at the details of that, because there's a lot of fine print in these policies, right? In terms of what it actually covers, so that you're aware of what would actually pay. Right. I mean, we're not going to go into all those details today because, like I said, we promised everybody that we weren't going to be hitting snooze here. But we should review that fine print.
Yeah.
To make sure that it's going to cover your needs.
Yeah, exactly.
Right. Because there's definitely things like if you're in, like, let's say there's different classes for jobs. If you're in more of a, like, let's say a professional job, in theory, if you were to get injured, and you could still go and work maybe in retail. Maybe you're a lawyer or an accountant and you can't do your actual job anymore, but you could go work as a teller or you could work on the cash register. So yeah, that covers the group benefits side of things. Okay. But then there's private policies, which it has a lot more customized features.
So like in a private policy, it is, well, again, there's a formula. It's a certain amount of your income that they're going to cover. And then you have the ability to protect a little bit more. So for example, if you, let's say you work in a similar like role, like a business type job, and you have some sort of disability that prevents you from doing like your job. It doesn't mean you can't do another job.
Right.
right? And so we tend to look at like disability policies when it comes to fine print and all that sort of stuff in terms of what is it that you're actually looking to protect? Are you
Hmm.
protecting your potential income for just this job only? Or are you protecting your potential income for any type of work that you might not be able to do?
Right.
If you wound up doing like being in a job, I don't know, you have some sort of injury and you're not able to do, your business style job anymore, then you wound up having to maybe move into something else that does not bring you joy at all, which doesn't help you heal from the initial injury that pushed you out of that sort of realm to begin with, then that could be a really tough spot to
Hmm.
find yourself in. So there's different types of disability policies that protect your ability to earn an income up to a certain amount. And then from there, it is what type of income are we looking to protect? Your own income, the ability to earn any income, or something like that.
Right. And so I guess our key takeaway for this is just make sure that if you're only going off of your group insurance policy, that you read the fine print, you know exactly what you're covered for, so you're not
Mhm.
surprised.
Mhm.
And if you read that fine print and you decide this isn't the type of coverage I want, or I want to be covered for my exact occupation. So if I was a surgeon, and then they said, well, yeah, sorry, you can't perform surgery, but now you're going to have to become, do something else, right?
Mhm.
I want to protect that so that I
Mhm.
don't have to go do something else.
Right.
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 So I think it's just making sure you're aware of what it actually covers and what you're looking to protect. And then
Mhm.
that's where people like ourselves come in to
Mhm.
play, right? And we will walk through all of that with you. One thing I do want to keep in mind when it comes to how insurance payments are paid out
Mm.
is that you have to make sure that you as the consumer or the person is paying the monthly premiums on that disability insurance,
Mhm.
because in order for that payment, like let's say you got disabled, those payments would be paid to you tax free as long as you were the one paying the premiums.
Mhm.
So,
Mhm.
for example, if you let your employer pay those premiums for you, guess what? You get disabled, that income is all going to be taxable to you now because your employer paid for it.
Yeah.
So, I just want to kind of clarify that because I have come across that a few times where clients were letting their or pushing their employers to pay for the disability insurance. But if you actually do need to use that benefit,
It
it makes your
doesn't.
money not go as far.
Exactly. Exactly. And it's really, I find with the group benefits, especially when people are looking at their options,
Hmm.
that whole thing about taxable income after or taxable or non-taxable income or who's paying the tax or whatever, it is so confusing on the paperwork. Like it's tough for people to read through and figure out.
Right.
Right. So, and even if it's stating in there, well, if you pay for it, then it's a non-taxable income afterward. It's like one line in like a huge sheet of paper of numbers.
Yeah.
So it can be really tough. So this is exactly where we come in. And always, if you're confused on group benefits, just always seek help.
So I don't know if you saw like Charlie and the Chocolate Factory, that
Yeah.
movie, but like when he gets all the kids to sign it and it like goes on and on, starts in big, really big script, and then all of a sudden it's like keeps going and going and going to where it's like a little tiny magnifying glass. That's how
Yeah.
I feel like insurance policy contracts are.
Yeah. This is actually really like it segues nicely. The next question that we have is how often do people assume that they're already covered and then find out that they're not?
Well, I think as to our point in what we were just talking about before is that people assume through work that they have coverage, but often what will happen is that they usually get automatically enrolled in some sort of short-term coverage.
Mhm.
We often don't necessarily know what we're covered for, or a lot of people actually opt out
Mhm.
of longer term coverage, right?
Mhm.
Because you might enroll in the short term or that might automatically come with your group benefits. But in order to include that longer term benefit, it would cost you and your family a lot more.
Right.
So often when
Right.
you're filling out those paperwork, you're not really guided. Like nobody guides you through that at
Yeah.
work.
Yeah.
And you probably just say, I just want my premiums to be less. And you might select no on
Right.
that, right?
Right.
And so it would be a really unfortunate situation to go through that experience, which so many of us people do, right? We just say, yeah, we want our prescriptions and to go to the dentist,
Right.
right? And then to find out later, oh, shoot, I do not have any coverage whatsoever for the long term, right? So
Mhm.
that's where we really come in, and something that we do in our practice, and I'm sure a lot of our colleagues do as well, is that we actually review group benefit plans and insurance policies. And it's one of the cornerstones of what we ask our clients.
Mhm. Mhm.
to make sure that we can find any gaps for them.
Right. And it's easy to miss the gaps. Like, back in the day, it was a while ago.
I feel like I should
like,
plug our other
it was
podcast.
it was a
We just
long
did one.
time ago. I accidentally waived all my benefits. I didn't even know I was doing it. It was
Mm.
right when I was first starting in this industry. I had no idea. And then I needed something and then learned that I'd waived it all. I was fortunate to be able to get back on it and do the stuff, which
Mhm.
doesn't always happen, right? Like usually if you make your choice, you've made your choices and then away you go. I accidentally waived it, but I was able to prove that I had made the error and how I made the error, and then I was able to get back on.
Yeah, and I think that's where I will encourage everybody to bring this to your financial planners, your advisors, and have them do a review for you,
Mhm.
because it's so much more helpful just to have that extra set of eyes
Mhm. Mhm.
to kind of scan those documents.
Mhm.
And usually, insurance specialists or insurance advisors, they'll be able to quickly tell
Oh yeah. Yeah.
what the gaps are.
Yeah. Yeah.
So we were just talking about you starting out as a teller, right? And trying to figure out the whole group benefits
Mhm.
that was brought to you. For someone who's just starting out in their career, what should they look at first, right? Life insurance or disability coverage, especially if cash flow is tight.
Mhm. Mhm. I'd say disability.
And really, why?
Well, if you don't want to move back in with your parents, if you want to be able to afford the stuff, if you want to be able to buy groceries and do all this sort of stuff, it's cash flow that you need. Disability insurance is going to provide that living benefit of cash flow if you're disabled. So life insurance is for after, disability is for right now. And then if you're just starting in your career and you've got this long trajectory ahead of you, you know, the stopgap at the beginning to help you get through to the next stage of disability, like with disability insurance, is like priceless. So, okay, I'll ask you a different question. It's not on our list, but it's a fun thing.
Okay, sure.
How often do you hear when you're talking about disability insurance? How often do you hear, "Oh, if something happens with me, I'll just move in with my parents"?
Not so much anymore, as
Hmm.
the people I'm hanging out with were actually getting quite older. But if you would have asked me this about 10 years ago, that was probably every single person's
Yeah.
plan, right?
Yeah.
That was their default. I'm just go back home with mom and dad. At this stage, I couldn't even imagine doing that myself with my
Mm.
son and my husband and animals and
Right,
oh my
right.
goodness, to put everybody through that. And I'm just talking, I'm on both sides of things. That would be a very, very hard transition.
Yeah.
So, and I think everybody likes their personal space. And
Mhm. Mhm.
for me, having disability insurance just allows us the flexibility. And maybe it makes sense, right? Depending on the illness, maybe you need that family to rally around you. And so you do want to move back in, right? Which is totally fair as well. But at least you're going to be financially independent.
Right. My favorite answer or response to "I'll just move in with my parents" was always like, "Well, do they want you? Have you asked them?"
Oh my gosh.
Maybe they have plans, right? So, and of course, we're always talking about hypotheticals, right? So, I mean, like, are you sure? Are you sure that's going to go well for you?
Why don't you go home after this and just pick up the phone and see what their answer is?
Yeah.
Do I need insurance? Maybe they'll offer to pay.
Yeah, maybe.
So we talked a little bit about disability insurance.
Mhm.
Let's talk about critical illness insurance. That's kind of like the new kid on the block, right?
Right. And one of
So,
my favorites.
yeah. So let's explain to our viewers what critical illness is all about.
Critical illness insurance is basically a lump sum injection of cash into your plan. So there has to be an illness, a diagnosable illness of some sort. There's a series of illnesses and such that are covered. Critical illness insurance can be, just for sort of the big illnesses, cancer,
Big
stroke,
three.
heart attack. Yeah. But then also there's a whole series of other illnesses now that can be covered by this. They do have to be quite serious. So there is a period of time where you do have to survive this illness or disease that you have before the policy will pay. But then it'll pay a lump sum injection of cash into your bank account tax free.
Yeah, and it's not like disability insurance where it's a monthly income.
Mhm.
It is actually a lump sum money that you can do with as you please.
Mhm. Mhm. Let's talk a little bit more about this. It is my favorite type of insurance to chat about. Sometimes we call this breathing room insurance. What do you think that means?
Yeah, I actually really, really love this type of insurance as well. I want to share like a story with you if you're okay.
Yep.
It's one that, when I was actually first starting out in this career, I came across a client that had this insurance and they were terminal, but it was going to be a period of time. They had a little bit of a runway there, and they were paid out this critical illness insurance. And some might say, okay, well, what we're going to do is we're just going to pay for extra care costs and things like this. But for her, what she really wanted to do was take the whole family to Disneyland.
Mm.
So she used that money. Everybody flew like first class to Disneyland. I get a little teary eyed thinking about it, but and they all just went and had a wonderful family vacation.
Hmm.
Yeah.
That's wonderful.
Yeah. So okay. I do get teary eyed.
You
I
need
gotta
to drink
give
some
it a
water.
second. Yeah. No, I'm good. I'll just do a breathe and then I'm good to go.
It
as
could be
well.
used for whatever you want it to be used for. That's the amazing thing about it. It's not, contingent. Receiving it is not contingent upon, as you said, that monthly thing. How much income are you earning? And because you've earned this much income, now you're getting this part clawed back. Like, it has nothing to do with that. It's a lump sum of cash that you get to do what you want with. And you don't have to explain it to anybody. You don't have to prove it to anybody. You can do what you and your family need with that money.
Often when we're talking about critical illness insurance, people just assume it's for older individuals. Why do you think that is?
I think it could be because some of these illnesses maybe in the past we've seen happen later in life, but we're seeing all sorts of illnesses and diseases start happening earlier and earlier and earlier. I think also people wouldn't necessarily think about needing a large injection of cash,
Right.
right, until they're older, because maybe then they start thinking that that's where it's going to be important. Um, but otherwise, I don't know.
Yeah, I agree. And I think a lot of younger people really feel invincible,
Mm-hmm. Mm-hmm.
right? Until they see somebody in their friend circle, get sick. It's just not something we think is going to happen to us.
Right.
I think that's a common trend throughout all of this.
Yeah. I mean, how often has that happened? People come into our office and sit down and they say they've had this event in their lives that's happened to somebody else, and they come in and say, okay, it's time for me to start paying attention to this now. It's time for me to
Exactly.
do something with this.
Because
So,
it hits home.
yeah, exactly. Have you seen it help a family or a client manage the life side of recovery, like bills, travel, time off, in your experience?
Yeah, definitely. I mean, we've seen so many situations where people have actually had to relocate,
Mm.
right? So if we think about it, even in smaller rural communities, they might need to go to a bigger city center
Mm-hmm.
in order to get the care they need.
Mm-hmm.
And usually that means a spouse, or maybe it's a child, or vice versa, moving with them.
Right.
Right. So they might need to relocate for 6 months. How do you work? Where are you living? That's a big, upheaval to your day to day.
Mm-hmm.
Right. Maybe it's even as simple as you have pets. Like, what are you going to do with those pets?
Right.
Right. So there's so many different things to think about. So yes, an infusion of cash can be extremely beneficial in situations like this.
Yeah, I agree. I feel like we would be remiss if we didn't bring up the GoFundMe trend
Yes, that's everywhere now.
everywhere. And there's nothing inherently wrong with it. I find that there's always the best intentions of everybody to
Mhm.
start a GoFundMe. There's an adage I've heard recently from our producer is that you can always patch a tire once it's popped, but how do you proactively ensure that that tire is not going to pop, right? How do GoFundMe's fit into the picture, or how can we sort of protect against needing something like
Yeah,
that?
remove the unknown.
Right.
It's unknown. You don't know. Hopefully, you're going to get somebody that donates, and people are going to donate, or someone's going to set it up on your behalf.
Right. Right.
But wouldn't it be great if you didn't have to?
Exactly. And somebody might just set it up for you anyway, right? Like
Right.
that's a thing. You might have all the insurance in the world to cover you for everything, and then somebody feels like it's a good idea to do it, and they might set it up, or they might not.
Right.
Maybe people don't know your story, and
Exactly.
then you wind up in a precarious position.
So we've already talked a little bit about, you having these conversations at home with your husband.
Mm-hmm.
What's the first conversation our listeners should have with their family and their partners about insurance?
The first conversation?
Yeah.
I guess I would like, we're not saying the first, like, should we consider life insurance, disability, and critical illness, like that
No,
type
you're
of
just gonna
thing. It's
open up.
just
You're opening up the conversation to the possibility to entertaining insurance. Like, how would you get them to be open minded to the idea of insurance?
I guess I would start with chatting about what we think would happen if the other weren't there. Sort of. I mean, I guess I know for my husband and I, it was me saying, "Hey, I'm really like this is a huge deal for me. I'm really worried about this. How are we going to plan for this?" Like, and it was before I was a planner, by the way. But like, how are we planning for this? What's our thought on this? It's causing me a lot of stress. And then he said, "Oh, I don't know." And so that's sort of where our conversation started. He might
Right.
have said a bunch of other things too, but what would you say?
So I say just embrace the conversation. It's really, really hard to talk about any type of mortality, um, any type of illness, disability
It's hard to talk about money in general
in general.
sometimes.
Yeah.
Yeah.
And so I think just have the conversation, because if we don't, and if you don't, it just leaves too much up in the air for chance,
Yeah.
right? Like it's just better to know and be aware than to
Mhm.
be surprised, in my mind.
Mhm. No, it's very true. When, when we're considering, chatting about insurance and all that sort of stuff, how do we make sure that our clients don't feel pressured by this? Just informed.
I think by doing exactly what we're doing here today is we just want to educate people, let
Mhm.
them know their options. And I'd really hope that if they are working with somebody, they would come up from the approach of care and understanding
Mhm.
and
Mm.
not product based,
Right.
right? I
Right.
mean, this should be a conversation of what will happen if X, Y, and Z occurs.
Right. Right.
And then some people's situation, they're going to be just fine. Like they
Mhm.
might not need it at all.
Right.
But we need to know, right? One way or another, if there's a gap that needs to be filled.
Somebody said to me once a long time ago, they said, if your husband passed away tomorrow, would you be able to get up the next day and go to work? And you alluded to that earlier in your conversation, but it was so impactful to me
Right.
and a way to really make me understand what the question was. And that's not even like if we consider sort of our question before about calculating, how much insurance we would need. That's not even just considering the debt or, what we want for our kids later on or something to that effect. There is also that portion of what will I need right now because I'm not getting out of bed.
Exactly.
Yeah.
And being able to sit in that and not feel the even more pressure.
Hmm.
Yeah.
Thanks so much for watching
And listening.
to our second episode of Insurance Without the Snooze Button.
Hopefully you're all still awake.
I think so.
Yeah.
I think we've made it exciting.
I sure hope so. Anyhow, if you want to watch more episodes, please check us out at islewealth.ca, follow us on Spotify, or subscribe on YouTube.
Thanks so much.
Bye for now.
Corporate disclaimer. This podcast has been prepared by and with expressed opinions of Joanne Cabin and Melissa McGuire, and are not necessarily the opinions of Raymond James Ltd, RJL. Statistics, data, and other information presented are from sources RJL believes to be reliable, but their accuracy cannot be guaranteed. This podcast is for informational purposes only and should not be construed as an offer or solicitation for the sale or purchase of securities. Investors considering any investment should consult their investment advisor to ensure that it is suitable for the investor's circumstances and risk tolerance before making an investment decision. Past performance is no guarantee of future results. Information provided in this podcast is general in nature and should not be construed as providing legal, accounting, and/or tax advice. Should viewers have any specific questions and/or issues in these areas, please consult a legal, tax, and/or accounting advisor. RJL is a member of the Canadian Investor Protection Fund. Raymond James USA Ltd. advisors may only conduct business with residents of the states and/or jurisdictions in which they are properly registered. Raymond James USA Limited is a member of FINRA and SIPC. We hope you enjoyed the podcast, and for more information, please visit islewealth.ca.